In the ever-evolving world of trading, catching the next big move in the market is every trader's dream. Imagine having a trading tool tailored to pinpoint these crucial moments in price, turning potential into profit.
Like that!
Well, ladies and gentlemen, welcome the Breakout Finder, or the BF indicator, a game-changing tool designed to identify market breakouts right as they happen. Crafted from complex algorithms and keen market insight, this tool not only identifies but also anticipates breakouts in the market. Stay tuned as we explore what this indicator is, how it works, and how we can use it to spot super profitable trades in the market. If you end up finding this video helpful, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, go to TradingView and open the indicator search tab. Type in Breakout Finder. Select this one by Lonesome the Blue. The Breakout Finder, or the BF indicator, is a technical analysis tool that aims to identify breakout points in a price chart. But what is a breakout and why is it so important? Well, a breakout is basically an instance when the price of an asset moves outside of a defined range or boundary. Traders often look for these breakout points to make trading decisions, as they can signify potential major price movements. Now, looking at this indicator, you can see that it's actually really simple. It's made up of very few components separated into two colors, blue and red. On the blue side of things, we have this rectangle and this upward arrow. The blue rectangle represents a resistance level, and the blue upward arrow indicates a break above the resistance level. Conversely, on the red side of things, we have a red rectangle and a red downward arrow. The red rectangle represents a support level, and the red downward arrow indicates a break below the support level. Looking at the settings of this indicator, we can see several customizable options. The period. This refers to the number of candles used to calculate the pivot points. Pivot points are used to determine potential support and resistance levels in the market. Maximum breakout length. This specifies the maximum length or duration within which the script will search for breakouts. Threshold percentage rate. This determines the width of the breakout area. This width is calculated using the highest and lowest prices of the last 300 candles. A higher threshold will make the breakout channel wider, while a lower threshold will make the breakout channel narrower. Minimum number of tests. This indicates how many times the price must attempt to break through a support or resistance level before it's considered a valid breakout. So for example, if set to 2, the price should have tried to breach the resistance level at least twice before a breakout is confirmed. Coloring and line style options. This allows the user to customize the visual appearance of the breakout rectangles and arrows on the chart. And then here we can change the colors and the line style of the support and resistance levels. For the strategy we're going to showcase in this video, we're going to reduce the maximum breakout length to 100. Now, at this point in time, I know you may be thinking,
but how can we use this indicator to identify breakouts in the market as soon as they happen?
Well, it's really simple. This indicator is probably one of the easiest indicators to use on the planet, and probably the easiest in the entire universe. I mean, look at this. Whenever there is a blue rectangle followed by a blue upward arrow, that indicates a bullish breakout in price. This essentially means that the market has broken and closed above a resistance level and is an indication for us to enter a long trade. Conversely, whenever there is a red rectangle followed by a red downward arrow, that indicates a bearish breakout in price. This essentially means that the market has broken and closed below a support level and is an indication for us to enter a short trade. Even though this indicator is super accurate, just like any other indicator, this one cannot be used alone. If you used only this indicator to trade, your portfolio is probably gonna go down the gutter pretty quick. To craft our strategy around this indicator, we're gonna need some form of trend confirmation so that we can only take breakout trades that are aligned with the overall trend. Momentum is super important, which means we're also gonna need a momentum indicator. Before we add these indicators to our chart, let's talk about our channel sponsor who helped make these videos possible, hankotrade. hankotrade is one of the most reliable forex brokers out there. I personally use them on a daily basis. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest it can go. For those of you that love high leverage, hankotrade offers a maximum leverage of 1 to 500. If that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $25,000, they're going to give you a bonus of $25,000. So now you'll have a total of $50,000 to trade with. To access the bonus as well as all the other perks, sign up to hankotrade using the link in the video description. Now back to the video. Open the indicator search tab and type in squeeze momentum. Select this one by Lazy Bear. Next, type in trend lines V2. This one by Lonesome the Blue. Double-click on the squeeze momentum indicator to access the settings panel. On the style tab, disable the plot option and then click OK. For the trend lines indicator, yes, all the settings are going to be left at the default values. The trend lines indicator is going to be used to identify bullish and bearish trends in the market. How we're going to do that is really simple. Whenever there is a green trend line that is angled upwards like this, that indicates a bullish trend, and we're going to be looking for bullish breakout entries. But whenever there is a red trend line that is angled downwards like this, that indicates a bearish trend, and we're only going to be looking for bearish breakout entries. The squeeze momentum indicator is going to be used to identify momentum in the market to make sure it is high enough for us to enter long and short trades. We will only enter long trades when the histogram of the squeeze momentum is colored bright green, and only short trades when the histogram is colored bright red. Now, let me show you how we can take trades using this combined indicator strategy. To take a long trade, these are the conditions. First, the market should be in a bullish trend. To confirm that, we just wait for the trend lines indicator to print a green trend line like this one. This indicates a bullish trend. After establishing that the market is in a bullish trend, we want to wait for a bullish breakout to happen within that bullish trend. To confirm that, we just let the market play out until a blue rectangle is printed, followed by a blue upward arrow. This rectangle indicates a resistance zone, and this upward arrow is a confirmation that the price has broken and closed above the resistance zone. This breakout candle now becomes our entry candle. Next, before we enter our trade, we want to make sure that there is enough bullish momentum in the market to push the price all the way to take profit. To confirm that, we just make sure that this last bar of the squeeze momentum indicator is colored bright green. All our entry conditions are met on this candle, so we're going to enter a long trade here. The stop loss is going to be set below the most recent swing low, and for the take profit, we're going to set it at 2.5 times the risk. We let the trade run and take profit.
Come on, man! That's too easy!
For short trades, we're just going to reverse all the conditions. First, the market should be in a bearish trend. To confirm that, we just wait for the trend lines indicator to print a red trend line like this one. This indicates a bearish trend. After establishing that the market is in a bearish trend, we want to wait for a bearish breakout to happen within that bearish trend. To confirm that, we just let the market play out until a red rectangle is printed, followed by a red downward arrow. This rectangle indicates a support level, and this down arrow is a confirmation that the price has broken and closed below the support level. Next, before we enter our trade, we want to make sure that there is enough bearish momentum in the market to push the price all the way to take profit. To confirm that, we just make sure that this last bar of the squeeze momentum indicator is colored bright red. All our entry conditions are met on this candle, so we're going to enter a short trade here. The stop loss is going to be set above the most recent swing high, and for the take profit, we're going to set it at 2.5 times the risk. We let the trade run, and take profit. As you can see, by harnessing the power of the Breakout Finder or the BF indicator, you can have the potential to anticipate breakouts in the market and position yourself for maximum profitability. With the combination of trend confirmation and momentum checks, this strategy ensures that you're not just trading breakouts, but the right breakouts. Now remember, while this tool is powerful, always ensure you conduct your own research and practice in a demo account first. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.